Trading penny stocks may be the latest craze, but what are the risks? Should you start trading these highly speculative investments? Watch this video to find out more. If you would like to learn how to start penny stock trading, you aren't alone. Many new investors are tempted by the allure of penny stocks. Penny stocks offer the potential of overnight success with very, very low initial cost. I can assure you, for every single success story, there are about 9 failure stories. The price point is the biggest allure for investors. If you see a stock that's 50 cents with massive hype projecting it to move to $5 in the next 18 months, that sounds too good to be true. Well, if it sounds too good to be true. Have you ever watched the scene in The Wolf of Wall Street where the character, Jordan Belfort, played by Leonardo DiCaprio, walks into the penny stock trading firm called Investor Center? This is the scene that I think of whenever I think of penny stock trading. I'm not suggesting that all stocks traded over the counter or penny stocks are actually worthless. There could be several that actually have untapped value. I'm only suggesting that we need to make sure we do as much due diligence and research as we can to learn the best way to start penny stock trading. In this video, I discuss what penny stocks are, and the tiers associated with them, where you can trade penny stocks, the potential risks, then finally a quick strategy on how to start penny stock trading if you are so inclined. Remember to please subscribe to my channel, turn on the bell for notifications of new posts, and please comment on my videos with what you liked and what I could talk more about. Also, as a disclaimer, understand that I am not suggesting or recommending any type of trading or investing strategy. This video is merely for informational purposes, as I am not a licensed representative. Please consult with your licensed representative before making any trading or investment decisions. I want to read this quote by Jesse Livermore. If you've not heard of Jesse Livermore, he's a stock trader back in the early 1900s and through the Great Depression. He's arguably considered the father of day trading. The game of speculation is the most uniformly fascinating game in the world, but it is not a game for the stupid, the mentally lazy, the person of inferior emotional balance, or the get-rich-quick adventurer. They will die poor. What do you think about that? It sounds a lot like a lot of things that I've been saying too, with the idea that everything requires research and dedication and time and education. Yeah, so I picked this quote because the nature of penny stocks is extremely speculative. So we want to start off just with that understanding. Now, what are penny stocks? So generally speaking, a penny stock can be any stock that is under $5 in cost per share. That's a general understanding of what a penny stock is. However, these penny stocks between $1 and $5 are more often than not traded on a national exchange, and they are regulated by government agencies. There's also other tiers of penny stocks, though, that range from 1 cent to $1 and even less than 1 cent. Yes, they can absolutely go to 1/10,000th of a cent per share. It's going to be very appealing if you consider $10,000 will buy you 100 million shares, and if that stock goes to 0.001, so moves up just a little bit, then the value of your position becomes $100,000 with just that 1 decimal place move. So that is definitely appealing, but keep in mind, what is it going to take for it to move that 1 decimal place? Now, this, it sounds exciting, but keep in mind that penny stocks are actually a lot more risky than regular stocks. Now, for the purposes of this article, I'm really going to refer to penny stocks as anything under $1 per share. They're usually startup companies that are trying to acquire capital. They don't meet the listing requirements to trade on a larger exchange. So in that manner, penny stocks will usually trade via what is known as the pink sheets or over-the-counter bulletin board, OTCBB. These are both electronic trading platforms that connect buyers and sellers. Companies listed on the pink sheets are not required to disclose any financial statements. This means they could be completely bankrupt or have very, very small operations. They will usually have low liquidity, and if a trade is placed, it could take hours to actually fill that trade, or the trade may not fill at all. Now, where can you trade these penny stocks, though? It's Now that you have a better understanding, kind of like what penny stocks are, I'm sure that you are asking where I can trade them. Well, see, the stocks between $5 and $1, $1 and $5 are usually traded, like I said, in a brokerage account, as long as they are actually listed on the New York Stock Exchange or on just an exchange in general. Now, you can trade these stocks that are less than $1 at many brokerage firms, but you have to understand that you may need to work with the customer service side because they may need a third party. Now, especially if you want to venture into the world of sub-penny stocks, specifically on the pink sheets, maybe a little bit more difficult. They may be traded at the brokerage houses, but like I said, you want to talk to the customer service to see if they connect with a third party. There could be additional fees. I would always stick with reputable brokers no matter what you do. I mean, there's definitely other sites out there. Like a website that I would encourage you to go to is OTC Markets Group. They're actually something that you can look at and get a feel for penny stocks. Webull also, they kind of made the name for themselves with penny stocks and cryptocurrencies. So I would say if you want to check out some of those, it's possible to get in there. But when I say a more reputable, well-known brokerage service, I would kind of talk, for example, of like the Charles Schwab's, the Fidelities, the E-Trades, the TD Ameritrades, those kind of more well-known brokerage houses. And they're the ones that have the customer service that would connect you potentially to someone trading sub-penny stocks. OTC Markets Group and Webull, those are, I'm not saying they're not credible at all. I'm saying that they are just not as well known, perhaps, in certain circles. Now, here's I guess, the steps in order to trade the penny stocks if you're really looking to trade penny stocks. 5 strategies that I've narrowed it down. First one, select the trading platform. This can be as easy as just choosing a broker firm that you like. Another quick way is to do an internet search on the best online brokers to start stock trading. Google's your friend in this manner because they're going to pull up about 1,000 different options on how to start penny stock trading. The top 5 that I see when I'm just pulling up, I mean, there's no particular order, but Interactive Brokers, TradeStation, Lightspeed, Fidelity, and Charles Schwab. Those are the 5 that I see when I pull up a quick search right now. The major piece to this section is fees. We need to focus on how much these firms will charge for penny stock trading. Many firms don't charge commissions, so we need to select the one that doesn't charge commissions. Second point is research, research, research. I said it 3 times to make sure that it was hammered in. This is really, I probably should have put this as number 1. It's the main category. You hear me talk about financial education in many of my posts, and when deciding on what to trade, research is key. There's a lot of hype around penny stocks, more so than traditional stock, even day trading or options trading. Exchange-listed penny stocks are much safer to trade. Remember, I said between a penny and $5 could even be listed on the exchange. There are multiple companies that are less than $1. They may prove to be financially sound. Conversely, there are many out there that are not financially sound. And there are many ways to screen for stocks that are under $1. Typically, this can be found in the research section on the online platform. Just the research screener, stock screener section, you can specifically state how much you're willing to spend on a particular stock. Personally, I would discourage trading in the pink sheets or the over-the-counter bulletin board networks. Most brokerage houses can trade these, but this would require some additional conversation with that customer service department. May take some time to fully execute. We talked about this already. There could be some additional fees. The big question mark with trading on the pink sheets or the OTCBB is that there is no regulation. This is very possible that these recommended penny stocks that are traded on the pink sheets or the over-the-counter bulletin board are possibly scamming people, and there's no way to know, really, because they don't report anything. So it's really, you might as well just take your money and throw the dice on roulette or go and play blackjack at Vegas. Might have better luck actually in Vegas, so who knows? But at least with listed securities, that are under $1, you can do more research on the company. There are requirements as long as they're listed on the exchange. Volume is step 3. You want to monitor the volume. I would discourage buying shares of companies with little to no volume, regardless of the price. Many penny stocks trade for less than 5,000 shares per day. Now, if there's a special news release on the company, they could trade in the millions for that one day. These could be better days to trade penny stocks as the liquidity of the stocks is much higher. However, remember, if there's more buyers than sellers, the stock's going to go up. And ultimately, we're trying to match up the buyers and the sellers. And if they have to it's a natural market where if they're offering for a certain price and no one's buying, then, they're either going to go down or they're going to go up. Step 4, you want to stay away from random emails. I can't stress this enough. When you start investing, when you start your investing journey, not just in penny stocks, but when you start your investing journey, inevitably there will be some eye-catching guru talking about what stock to buy or the hot stock to buy or buy my program and you get the 5 best stocks that are going to go up 3,000% in the next year. I really want you to avoid these random emails. Nobody really knows what the next hot stock is going to be. No one knows the next Google. No one knows what's better than Apple. Promotional offers can be extremely risky. Now, if someone is offering a program to teach you how to trade, that might be a better worthwhile program. Not, here's a best hot stock tip. There is great value in learning from someone who has been successful in the field, and most wealthy people have a mentor. Everyone builds upon something that someone else has created. Last one, manage risk. This kind of goes without saying, to be completely honest with you, but since we're talking about penny stocks and they're extremely speculative and highly risky, there's only a few ways to manage risk. Penny stock trading is, like I said, highly skeptical, very similar to gambling, and there are typically very limited news, limited liquidity, and limited general insight into the company. So we shouldn't use penny stock trading as the only source of investment income. Now, that being said, I'm going to actually say that one of the biggest ways to manage the risk in trading is set a profit or loss threshold. It's the best way to get small gains consistently with penny stocks and avoid the potential downturn. We learned about stop orders and limit orders it's in my post in my my WordPress blog talking about trading stocks. And actually, I think I did do a video on this, the basics of the beginning of stock market investing. Limit orders, stop orders potentially could be helpful, but penny stocks are not necessarily good for a buy and hold strategy. You never know. If it's something that you are interested in, about a little bit about the company, maybe you buy it and you hold it and you just put a few $1,000s in it and see what happens, but don't ever put money into something that you're not afraid to lose, especially penny stocks. Also, make sure to have safer, less volatile investments in another account to kind of diversify your risk from that perspective. But yeah, if you really want to start penny stock trading, I would say join a chat room and look for courses on how to trade penny stocks. Ideally, you could get a dummy account where you can just trade penny stocks without any type of cost or without losing any of your own money. You can kind of do a dummy account like they do in Forex and crypto. Now, I'm sure many of you can tell by now that investing is a passion of mine. Trading and investing was my first exposure to making real money online and outside of a day job. With that said, penny stock trading is extremely risky. I'm no stranger to risk. I've done a fair amount of penny stock trading myself. I would actually really caution a new investor in doing this, though. You really need to have a great deal of patience and a high risk tolerance. Plus, you'll need to be able to make quick decisions that affect your investments. I do have 2 books that I do recommend on trading penny stocks: The Guide for Penny Stock Investing by Donnie Lowy, and Invest in Penny Stocks, A Guide to Profitable Trading by Peter Leeds. I'll have both links to these in our description. But, all investing comes with risk. Penny stocks add a little extra. I would suggest talking to your brokerage firm about getting a trading simulator and experimenting in a risk-free environment before diving into the deep end of penny stock trading. Also keep in mind that many brokerage firms have the ability to invest in fractional shares of stocks. So, if you only have a small amount to invest, which draws most people in for penny stock trading, you can get fractional shares of Apple, Google, Amazon. You say, I want $200 worth of these 3 stocks, and they will split it equally, and you have fractional shares available to you. You can still participate in the upside. You don't have full shares, obviously, but you have the opportunity to participate in purchasing shares of a well-known, reputable, valuable company. I would also suggest cryptocurrency or Forex trading, since they have incredible liquidity and not a really high cost of entry. They'll still give you the volatility and exciting trading opportunities like penny stock trading would. Now, with anything, starting an investment strategy takes commitment and risk management. I would always suggest more than one investment asset, more than one investment strategy to diversify your risk. I firmly believe that creating your own business is an amazing way to build financial independence. It may take time, but if you get to and you're consistent and you get to the point where you're making money in your business, it could fund your hobbies of penny stock trading, cryptocurrency, options trading, Forex trading, whatever the case may be. If you have no idea how to start a new business, check out the link in my description and watch the short video. It is actually the same program and the same person that I learned from to get started with an online business. I really hope that this video gave you some more information to enhance your trading knowledge and spark an additional interest. As usual, happy trading. Thanks so much.